Amazon is scheduled to report quarterly financial results after the markets close on October 31st, 2024. That has investors asking if they should buy Amazon stock before the company announces earnings. I'll answer that question in this video. I'll also talk about what investors should look out for from Amazon in the upcoming earnings release, the key numbers, the key categories to look out for, and what segments are more meaningful to Amazon stock investors when the company reports its financial results. So I'll detail all of those figures so that when the numbers come out, you'll know immediately whether or not the numbers were good, bad, or excellent, right? So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its latest quarter, Amazon reported net sales of 10% growth at $148 billion, compared with $134 billion in the same quarter the prior year. But more impressively, the operating income jumped to $14.7 billion in the second quarter, compared with $7.7 billion in the second quarter of 2023. For the most part in 2024 and the couple of quarters in late 2023, Amazon's operating income has jumped considerably when comparing year over year. Now, in this upcoming earnings release, you're going to see a slowdown in that trend because it's going to compare with the quarter from last year that already saw a significant increase. So now Amazon is facing difficulties in the year-over-year growth rates because it's already grown by so much in recent quarters. So now you're going to see a slowdown in the operating income growth, and I'm going to share with you a little bit later precisely what Amazon is forecasting there. Operating cash flow increased by 75% in the most recent trailing 12-month period to an impressive $108 billion. In its business, the company generated $108 billion in cash flow in the previous 12 months. That's truly impressive. And that was compared with $61.8 billion for the trailing 12-month period that ended June 30th, 2023. So huge increases there in operating profitability and operating cash flow from Amazon. Now, those rates of growth, like I mentioned, are going to slow down because it's difficult to compare with these levels already. So you're going to have difficulty adding to a $108 billion total. So Amazon stock investors should now look for the company to maintain these levels and grow not as quickly, but still demonstrate growth in these categories. And I think as long as the company demonstrates growth in these categories over the next 4 to 8 quarters, I think Amazon stock investors should be satisfied. The company CEO saying that we're continuing to make progress on a number of dimensions, but perhaps none more so than the continued reacceleration in AWS growth. And I'm going to share with you the accelerating growth rate in AWS and why this segment is the most important segment for Amazon and for Amazon stock investors. So getting into the specific guidance for third quarter, which is the quarter the company is going to report on, they're expecting net sales to be between $154 and $158 billion, or roughly 10% growth at the midpoint, 9.5% growth at the midpoint compared to the previous year. Now, operating income is expected to be in the range of $11.5 billion to $15 billion, compared with $11.2 billion in the same quarter last year. So at the midpoint, let's say $13.5 billion. That would be a roughly 20% increase from the same quarter last year. So as I mentioned, those rates of increases are expected to slow down, and that's okay because you're comparing with periods where the company's year over year growth rates were phenomenal. So it's not going to grow by that much when you're a business of this magnitude, right? Amazon is a multi-trillion-dollar company generating hundreds of billions of dollars in revenue and tens of billions of dollars in profitability. It's difficult to grow a business that's this large. Amazon has managed to do this for several years, which has been impressive. And especially the company's management in these unprecedented circumstances has been exceptional. The coronavirus pandemic, both going into the pandemic and coming out of the pandemic, created unprecedented business circumstances that were difficult to manage. I've seen many businesses fumble the either the pandemic entry where lockdowns were initiated or the reopening of the economy. Very few businesses manage both parts of that very well, and Amazon was one of them that managed both sides of that really well. Okay, some key things to look out for. Now, what I have here is Amazon's cash flow statement for the 3-month period ending June 30th, the 6-month period ending June 30th, and the 12-month period ending June 30th, all the way on the right. So you have 12 months, 6 months, and 3 months here. Now, what I want you to pay attention to is the purchases of property and equipment and how it's jumping year over year. You can see in the latest quarter, Amazon's purchases of property and equipment jumped from 11.4 billion up to 17.6 billion. Now, year over year, if you go to the 6-month period, you can see the bulk of that came in the most recent quarter. And if you look at the previous 12 months, you'll notice that it's relatively flat, 59.6 billion compared to 58 billion. Amazon's capital expenditures had actually decreased considerably coming out of the pandemic because the company invested so much going into the pandemic to make sure that it had the capacity to fulfill all of these new orders and new customers the company gained. Now, these purchases of property and equipment have less to do with the company's logistics network and more to do with the company's artificial intelligence capabilities. Amazon is investing to capitalize on this opportunity, and investors should be looking out for this number when the company updates quarterly results. How much is this increasing? Where is this going? And you want to compare this to the AWS growth numbers. So as long as AWS, which is Amazon's web services, which is where the company benefits from artificial intelligence, as long as that segment continues accelerating, I think you don't mind seeing Amazon investing in building out its data centers optimized for AI. I don't think investors mind that. Also, given how effective Amazon has been in these capital expenditures, I think investors should be giving Amazon a little bit extra rope because they've demonstrated skill in spending money on the business. They've demonstrated skill in allocating capital in areas that return excellent returns on capital. And so with a company like Amazon, with a great management team, I think you give them rope. And then there's companies where I say, no, I don't want you spending more money because you've not demonstrated any skill in this category. So I don't want to see you spending more money. And so when these types of companies announce that they're reducing spending, I say it's good, right? And one example is, let's say, the electric vehicle companies, right? Those forecasts for electric vehicle demand were way overblown. And now that these electric vehicle companies are reducing capital expenditures, reducing supply expansions, I commend those decisions because demand for those products are not great. The return on invested capital is not great. So I don't want to see more spending in those categories. This is the opposite of this case, where demand in the categories that Amazon is spending on are increasing, and Amazon has demonstrated skill in creating these services and products in these categories. So I don't mind to see the management team accelerating investments in this category, especially when you have a business that generated $108 billion in cash flow from operations in a trailing 12-month period. You've got to allocate that capital. What are you going to do with that money? If you just let it sit there, then it's giving you, very low return on investment. You're getting 4 or 5%, putting it in a money market account or a short-term government bond. Or you can give it back to shareholders through share buybacks. But the most effective use would be if you can find the business use, invest in the growth of the business. If you can find profitable ways to do that, that's the best thing a management team can do with the company's capital. It's not easy to do. It's not easy to find opportunities to invest capital that generate sufficient returns on the invested capital. And it's especially more challenging to do it at this scale. It's a lot easier to do when you only have $100,000 to invest into a business. It's much more difficult to do when you have $100 billion to spend on a business to generate growth. All right, so let's talk about AWS specifically. Here I have highlighted AWS's net sales growth year over year on a quarterly basis. And you can see that after several quarters of decelerating down to 12%, it's now 3 consecutive quarters of accelerating growth here from 12 to 13 to 17 to 19%. And I wouldn't be surprised if this increases again in the upcoming earnings release, given the rising demand for artificial intelligence. And this is where Amazon gets the revenue from artificial intelligence and the various services around artificial intelligence. And the reason why this is so important for Amazon investors is because the operating profit margin in AWS is multiples higher than in any other part of the business, at over 35% in the most recent quarter, and it roughly hovers somewhere between 24 and 38%, depending on the quarter for the company. So that's why this segment is the most critical segment for Amazon stock investors to look for in the upcoming earnings release. If this segment demonstrates revenue growth of 20% or more, with an operating profit margin of 30% or more, then the stock price is likely to perform well after the earnings results, regardless of the other areas, of what happens in the other areas. That's how important this segment is for Amazon stock investors. Now, the company is trading at a forward price to earnings of 32. I've had Amazon stock rated as one of my top stocks to buy all year long here in 2024, but when deciding if you should buy it before or after earnings, I don't feel the company is undervalued enough to allocate all of your purchase decision before earnings. And when you're this close to an earnings release, there's a lot of data that's come out that is not yet reflected in the company's financial statements. Those numbers I shared with you were results from the previous quarter. There's been several months that have passed since that quarter. So investors, if you're going into it buying before earnings, you're going into it with blinders on, and it's more informative. You get more information value when the earnings release comes out and you buy after the earnings release. However, the downside of doing that is you might miss out on a gain following the earnings announcement. In this case, though, I don't feel like the upside is a big risk for Amazon stock investors, those interested in buying Amazon stock. I don't think that there's any urgency to invest in Amazon stock before the company announces earnings. So if you've got, let's say, $100 that you want to invest or $500 that you want to invest in Amazon stock, I think the least risky way to do it is to put $500 before earnings and then another $500 after earnings. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.